Can you see the little Q&A box?
I can see the Q&A box.
Okay. Just in case anything pops up.
Now, do I have to click it?
If you click it, like an empty box will pop up, and that's where the questions will show up when people ask them. If you want to have that open.
Nothing. If I click it, nothing's happening, so that means there's no questions.
Right.
Perfect.
Okay. What is it, 10 o'clock? Yeah. Okay. Let's see.
It is officially 10 o'clock Texas time.
Okay. Well, good morning, everyone. My name is Annie Cantellis. I am the new Global and Commercial Program Specialist, so I'm going to be taking over these webinars starting today. Today we are, I'm going to be viewing the Doing Business in Texas, focus on the Austin market. Just some administrative items. It's going to be about an hour long with a Q&A session at the end. This is not for CE credit, so all viewers will be muted. But if you have any questions, if you just take your cursor and put it over the screen, a little box should pop up, and we will answer those questions at the end. And so today, our host is DeLea Becker from here in Austin. She's a commercial broker and owner of Beck-Reit. Is that how you pronounce Beck-Reit?
Beck-Reit.
Beck-Reit. All right. And so I'm going to turn it over to her now, and then at the end, we'll go over next month's webinar and talk about that a little bit. But without further ado, I will hand it right over.
Okay. Hopefully I'm not muted and you can hear me. So good morning, everybody. It is 10 a.m. here in Texas time. And I am thrilled that you are joining us this morning as I give you an overview of the market here in Texas, but more specifically Austin, Texas. So my name is DeLea Becker, and my slides are not moving. Hold on. Whoops. Okay. So quick look at who I am. I am a New Mexican, but I have been raised in the great state of Texas. I am a graduate of the University of Texas. I am owner, founder, and broker of two companies, Beck-Reit Commercial Real Estate and Beck-Reit Asset Management. I am also an owner of a civil construction company with my husband that is celebrating 20 years of being in business this year. Currently, I am the 2019 president of Central Texas Commercial Association of Realtors. I am a crew member and a proud commercial winner of the NAR 2018 award. Most importantly, I'm an avid investor in commercial real estate in Austin, Texas. I currently own 6 commercial properties. I am always looking for more. And this is the main reason that I stay very educated, because everything that goes on affects me and my clients. So Austin as we know it, I'm going to move this little thing because I don't really need to see me. Okay, I've got a picture here of the Austin skyline in 1931. Then we move over here to 2010, and below it is 2017. That is the explosive growth in skyscrapers over 7 years. It is phenomenal. Then I threw on another picture down on your left bottom is 2021. There's already 6 more skyscrapers planned or under construction. Oh, wait, hold on. Sorry, y'all. Okay, so let me make sure I got this. Great state of Texas. So I'm going to go over Texas a little bit, Central Texas, because Austin is in Central Texas, and focus on Austin for you. I will cover some Texas facts, overview of market growth to date, and what you can expect, Austin overview and how it fits into the Texas landscape. This big one is why the tech companies are flocking to Austin, an overview of real estate pricing, investment returns, occupancy, and then surrounding areas. We have a rising of the tide effect here in Central Texas. So please note that all the facts and figures are based on my research. You can certainly find other sources that have differing figures. So my objective here today is this simple thing. I want you to have an overview so that you have an understanding of what's going on in Austin if you yourself or your clients are thinking about investing here. Or on the other end, maybe you have some properties to sell and want to know why this is a good time to sell. I'm going to hold all questions till the end, the last 15 minutes. I may not have your answer, but I am more than happy to share my opinion with you. So everything is bigger in Texas. We have bigger hair, we have bigger pickup trucks. Our chicken fried steak is bigger. Our gas stations, Buc-ee's is the largest gas station, I think, in the world. It's certainly in the US, also wins awards for the cleanest bathroom and Guinness Book of World Records. And then I found this one this morning. Texas Association of Realtors, which this webinar is brought to you by, is the largest business organization in the state of Texas. So we do most everything really big. To give you an idea, if you are outside of the state of Texas, you may not know this. There's 2 states that would fit in the state of Texas, Arizona and California, or you could combine the smallest 14 states and fit them in Texas. Texas versus Russia. Russia has 144 million. We have 29 million, but we have more gross domestic product than Russia, and our per capita GDP is roughly 6 times higher than theirs. Pretty significant. So here in Texas, we like to think of ourselves as a powerhouse, and the numbers do show that. If it were a nation, it would be the 10th largest economy in the world based on GDP. Texas has 50 Fortune 500 companies, Mobil, AT&T, American Airlines, and more than 1,400 foreign companies. Texas encourages business and gets out of the way. This is why companies are coming here if they weren't established here, and then why many are being established in Austin alone. Texas has a low tax rate and lots of great people to hire. Now let me get into this. If you do not know Texas or do not know this, it is a non-disclosure state. There are only 14 states in the US that are non-disclosure that I've listed here. Why this is important is because real estate transactions are not disclosed in Texas. They don't go to the county office, and the problem with that for buyers is it's very difficult to find comps. You can, in some cases, whenever it's a publicly traded company or someone decides to release the sold price, it doesn't happen that often because most buyers do not want the county to know what their purchase price was. If they bought it for $2 million and the county has it on the rolls for $1 million, then their property tax bill is half. That's good for the owners, that's good for tenants, and so you have a lot of educated people here, they're in commercial real estate, that keep those values down at the county offices. So big benefit here in Texas. We are also a no income tax state, which is fantastic. There's only 7 of those in the United States, and I've got a list here that you can see. Most valuable resource in Texas is the people, and I'm going to show you that. The Federal Reserve Bank of Dallas was cited saying some challenges coming up on us are aging population, and because of that, slowing workforce rate. Texas is bucking that because of migration to the state. The key point is our valuable resource are the people. And he is quoted as saying, if you've got population growth, I tell you in advance, you've got quite an element of GDP growth. 2 demographics I wanted to share with you this morning. There are plenty more. Historic projection population of Texas by racial and ethnic composition. We are slated to be, by 2020, Hispanic population will be the majority in Texas. We are nearing that right now, as you can see in the graph at 2020, and clearly by 2050, it will be majority Hispanic. Next to that, and this is the full Texas population, the Austin population pyramid I pulled to show you the ages. So the largest age group we have here in Austin, Texas is this 25 to 30. This is your workforce, and this is why the companies are coming here. This is why we have incredible growth in Austin that so far doesn't seem to slow down. Boomtown, Texas. I'm going to go over a lot of these things, but we're the state capital. We've got major employers, big companies, big developments. Tech companies are the rage. Startups are happening here. Restaurants, barbecue, and tacos, all our favorite things to eat. And distilleries and breweries have really taken off due to some legal changes at the legislature. Explosive growth in hotels and tourism. South by Southwest, ACL, and F1 track. I'm going to show you some stats on those. Source Strategies did a study and showed that 6 of the 2018 top 10 Texas hotels in Texas were in Austin. That's incredible. Also, Austin boasts 30 hotels among the top 100 for revenue. In Austin alone in 2018, we added 4,100 rooms to our hotel slate, and there is more under construction. Why is Austin hot? One of the reasons I know this to be true, because I do work with tenants and companies moving here, Austin is what is known as an 18-hour city. If you haven't heard this term, I'm going to give you a good idea of it this morning. The 24-hour cities include Boston, Chicago, Los Angeles, New York, San Francisco, DC. Not only younger people, but people are moving to the 18-hour cities because they're lively all day and into the night, but not all night like 24-hour cities, and they're more affordable than your Boston, New York, Chicago. So 18-hour cities have proven to be a good prognosticator of growth. ULI is tracking progress of these. The data is compelling. Millennials are moving to these cities believing they can thrive. So I listed some things that make for an 18-hour city: live, work, play. An attractive mix of growth, opportunity, culture, affordability, uniqueness. These all combine to create a sense of place that has become very important to millennials, and I'm sure to all age groups. So I'm not going to peg them as the only ones that value it, because we all get the good of the 18-hour city. I wanted to give you an example of other 18-hour cities. This is a Business Insider 2016 report that they did. So it is dated, but it still shares the point with you that I want you to see. Number 1 is Seattle. Number 2, Dallas. Number 3, Austin. So in your top 9 there, you've got 2 in Texas, Dallas and Austin, and that is phenomenal. So what's hot here in Austin? 2018 economic impact of $350 million via South by Southwest. There was a direct participation of almost 500,000 people in South by Southwest last year. Yes, about a year ago, March. The conference includes 14 days of industry conferences. They had speakers such as Elon Musk and Melinda Gates. Also a 4-day trade show, 10 exhibitions, music festival, art program, gaming, and comedy. A huge boost to our economy, something that we have been enjoying for many years. ACL is Austin City Limits, and the 2018 impact was $264 million. It's a 2-weekend musical festival. They reported $104 million of wages to direct or indirect job creation for 2,900 people, almost 3,000 people. And then not to be left out over here is our F1 track. The F1 track does hold F1 races, but it holds other events, concerts, etc. So I found a great graphic that shows 2012 to 2015, really more so you get an idea. And it showed the impact of $5 billion over that 5-year period. You can read and see jobs, visitors, etc. And then all of these people come stay in all of the hotels. They eat at all the restaurants. It's a significant impact, and something that I can say I'm very proud of the city of Austin and Central Texas, that we have catered to this, established this, and helped it grow. We have benefited greatly. I will not go into great detail in opportunity zones, because if you have done any research, you know there's a lot that we don't know. But how it's important for us here in Central Texas, Central Texas and Austin. It was tax reform passed in December 2017. It is meant to stimulate investment. Why? Why is a reward for investors? Potential to create higher yields, the burn off of capital gains if you keep it 10 years, etc. The risks are significant as well because they are most likely in low-income areas. That's actually how they were targeted for the tax reform bill. There is a study by Commercial Cafes, and they found that there are basically 9,000 opportunity zones provided by the U.S. Department of Treasury. Significant is 32 Texas counties made the list. With Travis County, which is the county that the city of Austin sits in, it scored the highest for opportunity zone investment in the nation. 2 other counties made it high on the list: Galveston County, which is down on the Gulf, Harris County, which is Houston. My offices are in East Austin, right below the Mueller development, which I will give you some information on. My offices are sitting in an opportunity zone. The significant thing to know is the opportunity zone are based on census tracts from 2010. Whenever you're in Austin, Texas, that has had explosive growth since 2010, if you remember back to the 2 pictures I showed you, you can see how there's some areas that people are already developing that now fall into the opportunity zone. So it's not all easy fun and games. And I say this not just for Austin. Anywhere you go, you're going to need some boots on the ground, market knowledge, etc., to be able to make wise decisions. So whenever I speak of Austin Metro, I've got a map here to the left. It's got Austin. It also encompasses down to Buda, up to Georgetown, over to Manor, almost to Elgin, and out to Lakeway. So it's a large metro area, and I will try to be sure to say either Austin Metro or Austin City Limits. Central Texas, so I'm the president for CT CAR. My area is a 26 county that stretches Austin the middle, down to San Marcos, over to College Station, which houses A&M. To the west, we've got Llano, and then all the way up to Waco. Overview of market growth. So the Austin Round Rock Metro, I just showed you this map. It has roughly 2.17 million people, and there's a 2.5% increase from 17 to 18. Austin's metro growth ranked above other large metro areas like Orlando, Phoenix, and Dallas. Austin city limits, the population within our city limits is getting up to almost 1 million, currently at 930,000. Austin's the capital of Texas. It is the 11th largest city in the United States, and as far as state capitals go, we are the 3rd largest city that houses a state capital. The state of Texas GDP from 17 to 18 had a 6% growth, and it was number 1 in Austin at a 5% total for that year. 2018 population increased almost 400,000 in Texas, bringing it up to 28 million, a smidge more. Texas unemployment rate fell once again in April, and it has created more jobs year over year than any other state. Texas workforce has found itself back at a 3.7 unemployment rate. Just 1 year ago, we were at 4.1. So all metrics are headed to show us Austin and Texas are a great place to be. Overview of market, more projected growth. Austin's population is expected to remain among the highest for U.S. cities, and we are expected to reach 4.5 million by 2050. Now, just know that's 30 years away, 4.5 million. Projected growth is usually, I'm not a demographer, but based on our history, what's gone on in the past. So I'm sharing this state map here with population change from 2010 to 2017. We had Jim Gaines from A&M speak at a luncheon. What's significant here is 67% of the increase in population is happening in the urban triangle, which is Dallas down to San Antonio, and then over to Houston and back up to Dallas. So even more phenomenal is 87% of that population growth is happening east of I-35. So if you happen to be sitting over here in West Texas, we're not seeing the massive growth. They're the same. And please understand that's not true for the oil field. So everything out there that is pumping oil is booming. There's not enough anything. There's not enough houses, hotels, etc. So they're an exception, but it does seem like we're going to have oil production for the foreseeable future. Office projected growth. So I took stats from REIS 2019 report. I have these available to me through the Texas Association of Realtors. If you are a member, you too have access to them. They are very lengthy and full of all sorts of incredible information. So I just picked a couple things that we could compare and contrast. Our 5-year forecast for annual growth is 2.6%. And I've got a graph here. So we are looking good that rents are going to keep going up. They're going to keep going up. Our growth should start to slow in 2020. It's still okay. Whenever you've had explosive growth, as you can see up over here from 2016 to 2017, it's okay for it to level off. That's not a problem. I threw in construction and absorption and vacancy for you because it is significant to see the amount of construction that has occurred, and then it's showing a dip in 2020 and a spike in 2021. I'm going to venture to say that's because 2020 we've got more under site development, etc., not hitting the construction cycle. But you can see we are growing, expected to grow. 2023, I guess, is whenever they're saying that we might slow down. And one of my favorite sayings is trees don't grow to the sky. So it's okay. Markets are cyclical. We're all on this webinar so we can be experts and try to plan accordingly. But it's showing good annual growth. Retail, super close following it. Same report. We've got a 5-year forecast of 2.3% annual growth. Looks like we're supposed to slow down on that rental growth there around 2020 and then continue up. I am going to say that's because if you look down here at our construction, we're going to deliver a lot of space in 2019. It's going to take some time to absorb it, and then we won't have the explosive rent growth that we have been having. Multifamily, this is the sweetheart property set that everybody's in love with. Investors love it. Brokers love it. Austin, they are flocking here to buy anything. Heck, they'll even buy it if it's land and it's zoned multifamily. So we have seen a lot under construction, and I'm looking at the construction absorbency. Looks like we're going to slow down on our construction in 2020. I find this interesting only because I know a lot of brokers and developers that are out there hunting and buying and developing. So I'm not going to say I don't agree. I'm a little suspect. But again, slowing down from our explosive growth is not a bad thing, and hopefully stabilizing. Stabilizing can be a good thing. We're still seeing a 3.2% projected annual growth over 5 years, as in the rental rate will go up roughly 3.2. Office, so a breakdown of office. So we had 11.9% vacancy in the first quarter in 2019. And I'm going to say this is the Austin Metro. So in Central Austin, and this is really CBD, we've seen an overall asking rent go. Now it is $45 a square foot. It is up from $38 a square foot, which is a total of 17% year over year. That is phenomenal growth. It is our rents have risen for 9 consecutive quarters. And in 2018, 1.7 million square feet was added to our office supply. There's more coming. In the 2019 first quarter alone, we're expecting 500,000 to be delivered, and that will take our total inventory to nearly 55 million square feet. This is important to note. Of the total square feet delivered in Q1 2019, 86% of it was pre-leased. 4.5 million square feet of space remains under construction, so it is not completed construction, and 62% is pre-leased. So folks, if you are a developer in Austin, you are a happy camper. Pre-leasing at these levels is phenomenal and frees them up to go do more projects, build more multifamily, build more office to house our growing employee population and companies that keep coming here. So I'm a person that likes real world examples. I'm going to give you one. East Austin is where I own 5 of my 6 properties. So I've got a picture here. It's 1101 East 6th Street. I signed a lease with a software company 3.5 years ago, and we are putting it on the market. I am going in at 35% higher than what I signed that lease 3.5 years ago. So 35%, 3.5 years. I kid you not, folks. Now, this building does happen to sit 3 blocks east of I-35. It is in the middle of everything. I'm not super smart. I'm very lucky. We bought it in 2006. Nobody was over there, and now everybody is. Oh, so I did not fix my slide. That's okay. I'll give you the breakdown. Retail has a 95.8% retail occupancy, making it the strongest market in Texas. This is based on a market inventory of 49.5 million square feet. During the past year, Austin added 670,000 square feet, and our power vacancy rate is 4.6 locally. The U.S. rate is 6.5%, and our average asking rent is $30 a square foot, up 2.6 over the year. I did not edit my slides. Okay. I'm going to skip that one because you're going to probably appreciate the more high level. So Austin has some major employers. Clearly all markets do. Austin School District, City of Austin. We have a lot of state agencies here. Our University of Texas has over 24,000 faculty and staff members, and it is the 5th largest public university in the U.S. Everything is bigger in Texas. Medical, we are now a power player in medical. We have a recent opening of a $310 million medical center at University of Texas. It's a medical school, and we are already a hub for medical. So Del Seaton Medical Center now serves as our level 1 trauma center, and in Central Texas we only have we are the only location in Central Texas for a level 1 trauma center. The 2 closest are in Temple and San Antonio. Actually, Temple falls in Central Texas. So, why big tech companies are moving to Austin? So, I said it before, we've got an 18-hour city. We've got a young population, and Texas is business friendly. So I have a client that owns a software company, has started several, if not 2 dozen, and he explained to me that the universities here in Texas are pumping out phenomenal brain power. University of Texas, Texas A&M, Rice, and you know, if I don't name them, it's not that I'm leaving them out. Baylor, Texas Tech, SMU, TCU, Texas State. Phenomenal schools, and those graduates don't necessarily want to leave Texas. I think it's funny that a whole lot of A&M kiddos or Aggies flock to Austin. They don't stay in A&M, they get here, but that's okay. We will take them. Amazon is on the scene here in Austin. We were in the running for their headquarters. We didn't win. That's okay, because we got a whole lot going on with them anyways. Currently, they're in 245,000 square feet at the Domain. They just signed a lease for 145,000 additional square feet to create 800 new jobs here in Austin. In the last 4 years, this is per Amazon, they have created more than 1,000 jobs in Austin. Apple is a big player here. It owns or leases about 1.7 million square feet of office in Austin today. It roughly employs 6,200 people in this area, and it has just purchased another 135 acres to build 3 million square feet, which will have space for up to 15,000 employees. Welcome to Austin, Apple. We're sure glad you're here. Corporations' main reason for locating and expanding to Austin is cost of living, employee quality of life, diverse economic makeup, and Texas pro-business fundamentals. Some others that I didn't go into detail, we've got Google. They're currently in 200,000 square feet, signed a lease for an additional 180,000 in East Austin. Posley Energy, 302,000 square feet in our CBD. We also boast having Facebook, PayPal, Oracle, GoDaddy, and Residio Technologies is moving their headquarters here, a spinoff of Honeywell International. Big tech companies that are homegrown. So not only are we attracting companies to move here and to expand here, we have grown our own. Dell in Round Rock was founded in 1986, fairly well known around the world. It employs more than 145,000 people around the world, 14,000 in Austin. HomeAway is now going with VRBO as their brand. Was founded in 2005. They are currently occupying 450,000 square feet at the Domain in North Austin. And in March, they were tagged as the 15th largest tech employer in Austin with some 1,900 local employees. National Instruments. I honestly did not know this until I researched. They were founded here in 1976, not 976, I'm missing a one, and currently has about 2,300 employees in Austin. Let's not forget Whole Foods, Temple Inland, Keller Williams. For all of you agents out there, you might have heard of them. They were started here. Kendra Scott, Golfsmith, Cirrus Logic, U-Ship, Indeed, Alamo Draft House, and Torchy's Tacos, which may not make everybody's list of our homegrown companies to be proud of, but it certainly belongs there. Major developments. So I've said Domain several times now, so let me tell you what it is. It is a 303-acre mixed-use development in North Austin. It's become a tech hub, a millennial hub. It's really what we in Austin call a second downtown, which is fantastic because not everybody can get to downtown, and you will see we do struggle with transportation, both roads and public transit. So to have a second downtown separate north of is incredible, and it has allowed us to grow and get new businesses to Austin. 303 acres, 1.8 million square feet of retail, including 50 bars, 1.5 million square feet of office, has currently 2,700 apartments. Their goal is 5,000 and has 775 hotel rooms. The next significant development that I want to tell you about is the Mueller development. It is in East Austin. It's 711 acres. It's the old Austin Airport. It boasts 4.4 million square feet of commercial space. 650,000 square feet of that is retail and restaurant. Has 4,600 homes and houses Dell's Children's Medical Hospital. Another one to note that we're all very excited about, it is not on the ground, it's not planned and set in stone, it's in planning, It's the Austin American Statesman site. It's 19 acres right across Town Lake from Central Business District, and they are planning on 2.1 million square feet. A mix of offices, homes, shops, and perhaps a hotel are envisioned. So overview, let's get to the numbers. Overview of commercial real estate pricing and returns. I broke it all up into office, retail, and multifamily. There's not enough time to cover everything, but we'll start with those. So average sold price of office. This is the Austin metro area. This is not just downtown. Average is $340 a square foot. Cap rate is 5.7%. I agree with that. And this, just a note, downtown is seeing square foot prices up to $700 a square foot. So this is true for most markets. The closer you are to downtown, at least currently, the higher your rental rates and higher your per square foot sold prices, the farther you go out, you should see them go down. I wouldn't say significantly by any means, and that's not a hard and fast rule. So retail sales and market cap rates, pretty similar. Average is $326 a square foot. The market cap rate is 6%. And again, downtown, we're seeing sales at the $700 a square foot. Above and below, I've seen them higher, and I have seen them lower. Cap rates is significant. This, remember, is an average. So you can see them lower. You're not going to see much above 6%. If you do, buyer beware, make sure you do all of your due diligence. You might be able to find something that's a 6.5 or a 7. It's going to need a lot of work, or it's got a high vacancy rate, etc. So I do not think that's true just for Austin. I can only speak for Austin because I see it every day. Multifamily sales and cap rate. So the average unit is going for $171,000. Market cap rate is 5%, and the average occupancy rate is 93%. This is totally spot on. I see market cap rates for multifamily, Class A, or near University of Texas, on a major thoroughfare like South Lamar or Burnett Road, trading at lower cap rates. I mean, they'll go on the market for a 4 cap. Very important to note, if you are an investor yourself or you're representing investors, to get into these hot, popular properties, you kind of have to find somebody in Austin or at a big shop that's doing a lot of multifamily and get in the know. A lot of these things never go on LoopNet, CoStar, MLS, etc. So if that's what your investors are looking for, get connected. And I'm going to have some resources for you to do that here at the end. So whenever I talk about the explosive growth and the crazy numbers and everything else, like I said, I'm an examples girl. So I found one over the weekend that caught my eye because of the price change history. So this property is on South Lamar, and on LoopNet, it's listed for $15 million, and you get 2.4 acres, and that equals out to $143 a square foot for the land. Now, I haven't done due diligence on this property, but zoning is supposedly commercial services, mixed use, vertical, which means this is a development property. South Lamar is booming. They buy the property, they wreck the building, and they go up mixed use, vertical, 4 stories or higher. So 143 a square foot land, man, that's about right. I don't see a problem with that. Now, if you go on to RPR, you can find the property, except for it's listed differently. They've only got one address for it at 1.4 acres, and that averages out to 163 a square foot. Like I said, I don't really have a problem with the per square foot land value. I'm sure it is. Of course, you need to do due diligence. Is there floodplain? Are there utility easements? Who knows? So you got to get in there and dig, but that's any development deal. 2 things, LoopNet and RPR. So it depends on what you're looking at, but you know what? In both cases, it gave me the agent's name. So pick up the phone and call them or shoot them an email. Price change. I pulled this from RPR. 2015, sorry, December 2018, which was only 5 months ago, it went on the market for 6.9. It has increased 1, 2, 3 times in the last 5 months. And the last increase was just 60 days. And in 60 days, they went from 8 million to 10 million, which was a 25% increase. Folks, we actually see this happen a lot in Austin. Something will go on the market, they get a lot of traction, fantastic, and they start raising the prices. So 2 things to learn. Again, I don't think this is Austin specific. If it's a good deal, you better put it under contract. And this is a big one for my clients. Any of your clients that have, 5 agents calling around to find them off-market deals or call on things, really they're only hurting themselves because they're getting those prices going up. Let's pretend that I get 5 calls on my building. Guess what? I'm going to actually increase my asking price because I'm going to go, wow, I totally underpriced this. So, and this is important about Austin. I, DeLea Becker, play in the $1 million to $10 million range. So I think whenever you get up above 10 million, 15, 20, 25 million, probably a little bit more stability in pricing. You've got sellers that are REITs or institutions, more reasonable. Here in Austin, in that under 10 million range, we have owners that really aren't willing to sell. They have no need to sell. They've got 93% occupancy. They've got a great return. They just bought it 4 years ago, so they've got a great interest rate. So we see, and this has happened to me, agents will take listings and then we're required to overprice them because an owner will say, you know what, or I'll tell an owner it's $1 million, that's what it's worth. And they will say, well, I'm gonna have to pay capital gains on that, so let's price it another 20% higher. Let's go on the market at 1.2. And that just keeps piling on and happening over and over. So just know sometimes you're gonna see some crazy prices. It's not always the agent's doing. There's a lot of us in the background trying to educate our clients, but they don't always listen. Surrounding areas rising with the tide. I'm going to try to finish up here in the next 5 minutes. So some areas of interest are Leander, Cedar Park. There's Hutto, Georgetown. There's Round Rock, Pflugerville. They all have big developments going on. They have economic development departments that are out there eagerly seeking companies to come there, developers to build there, etc. There is opportunity there. The one pitfall that I will tell you is because they're close to Austin, they like to price things as if they're Austin. Surrounding areas additional to that is Buda, Kyle, San Marcos. I threw a graph on here. You all can get a copy of these slides so you can go through them in detail. Significant here is in 1 year, Buda's population increased 40%. And the county that houses Buda, Kyle, San Marcos, and Dripping Springs is the fastest growing county in the United States. It is Hayes County. So Dripping Springs is west of the Weird. It's got big city life and wide open spaces. The big developers, if you have not heard me say Endeavor Real Estate Group, they are doing the Domain. They've been tagged to do the Austin American Statesman development. Plaza Satio, there are golden boys here in Austin, and where they go, it's safe to follow. They did a huge development in Belterra, 90-acre commercial real estate project. So planning for growth. Austin's not the best at everything. We are lagging behind on our transportation. We need more roads, and we need better public transit. I don't know if we're ever going to get more roads. So we need better roads. We need better everything. We are not really good at moving people around. I think we are 4th in the nation for worst congestion. So just note this. It's also helped with all these mixed use developments, 711 acres whenever people can live, work, play. People are eager to do that. Companies are eager to take space there. So that's it's funny that our negative has turned out to be a benefit, and that is so true in Austin. We need more density. Employment, clearly, we're knocking it out of the ballpark there. We've got education as in the university level. Affordability is definitely becoming a struggle here. We're getting right up there with San Francisco. Not at the same per square foot, but the same struggle. Just having a challenge, having places for our teachers and our firemen and our policemen to live. Something that we have tackled is our airport. We've got massive growth underway there. We opened 9 gates this spring, and that brought us up to 34. And our next expansion will give us 32 more gates. So we're expected to double in size. Here's the conclusion. Austin's hot. If you didn't know that, I hope that's what you take away today. So it has been hot for a decade or more now. This is not something that just happened. Investors are flocking here to buy commercial property and buy residential portfolios. It is every property type, it's land, you name it. Warehouses, industrials becoming very big. So yes, I encourage you, please come invest in Austin. My biggest thing for today was to make sure you know why and what to watch out for, because anytime there's a great deal of hype, you should dig a little deeper. The hype could be something that's going to benefit you greatly, but it also could be something you need to watch out for more pitfalls. So my takeaway here, because I'm in the smaller purchase group, I'm not in the above 10 million purchase buyer. So there's fewer small purchase opportunities in Austin. If you're looking for under $1 million, there is not really anything. And I get that call probably once a week, somebody calling, I want to buy something in East Austin. I've got $400,000 to invest. I want to do something up to $1 million or 1.2 million. And I say, well, it is really wonderful you got my name. There's really not much I can do to help you. It's just that tight of a market. Again, we have some very overpriced properties. Anything that's not overpriced does get bought quickly. And then we've got a whole lot of transactions that never hit the market. And that's all a networking game. So it's getting tough for small investors. Also important, it's getting tough for our mom and pop tenants. Rising rental rates is significant, and then property tax burden. So triple net leases pass property taxes onto them. So we are seeing some struggle there. And here's my conclusion. So I want to thank you. My name is DeLea. I've included my email address. That is the best way to get a hold of me. And I would love to get emails from you. If you've got questions, you want more information, I'm happy to share whatever I've got. Like I said, I may not have your answer, but I will give you my opinion. I've also included my website. I do not update my blog super often, but probably once a month. And I do try to put things on there that are significant to our community, what's going on, so you can keep in touch. I've got a LinkedIn page, I've got a Facebook page, I've got a Twitter. So I will have TAR send these slides to you. You shoot me an email, I'll send you the slides. However we can get it to you, I'm happy to share. Oh, and I did miss. Okay, so I think I'm ready for question and answer if anybody's got something for me.
Yeah, let's give people a minute. And also just to chime in, this webinar was recorded. It will be on our Texas Realtors webpage under the events. You'll see something that says past webinars. And it will also be on the commercial Facebook page. So if you want to reference this or watch it again, ton of information. Thank you again so much. If anyone has any questions, don't see any right now. But DeLea, you said they could shoot you an email if they have.
They can absolutely shoot me an email. I've got a little red bubble, but if I click it, it doesn't do anything.
I can read you the question. Is there a map showing opportunity zones in Central Texas?
Okay, so like I said, I may not have your answer. Yes, I believe there is one. I can see if I can get a hold of it for you. An additional answer to that is I know that if you have a CoStar subscription, there is a way to toggle and use that as a resource. They have all of the opportunity zones mapped out. So I'm going to write down your question. Shoot me an email on that, actually. And what I'll try to do is whenever I find it, I will post it on the Facebook TAR website with this video so that it's a resource there for everybody. Yes, I know it exists, but no, I don't have my hands on it this morning.
Okay, let's see. And then I see someone with their hand raised. If you just put your mouse over the screen, it will pop up a little box so you can type in your question. Maybe, maybe not. Okay. You still can't see the questions? I'll just read them too. I think it's easier. I'm looking at the Dripping Springs market. Is Highway 290 freeway going to be improved anytime soon?
Oh my word. Okay. Wow. How do I answer that? I'm going to give you my opinion. I'm going to give you opinion based on knowledge that I have of TxDOT. TxDOT is our state agency that handles the highways. My civil construction company is actually a contractor for TxDOT. We bid it. We're a GC. So on a daily basis, my husband is out on job sites all day long. So we're well in the know of what's going on from a 10,000-foot view for TxDOT. The answer is, I hope I don't upset anybody when I say it, TxDOT is not a really big fan of working in Travis County and working with Central Austin, with the city of Austin. They're kind of tough cookies. So TxDOT doesn't rush in to build roads in Austin like they do in Dallas and Houston and other areas of Texas that welcome them with open arms. Dallas says, hey, let's build a freeway. TxDOT says, let's go. And Dallas says, you run the project. I'm dumbing that down for us all. But the answer is that yes, the 290 Y&O kill is supposedly got funding. It's got traction. It's going to happen. The long answer is they've been saying that for decades. So it seems to have fits of stopping and starting. I hope so, and I think with the massive growth that maybe they will be pushed to solve the problem faster than they have done so far. But it's pretty tough. I mean, the county and the city and the state are doing what they can out there. They're trying to widen it, but my opinion is it's going to be a tough thoroughfare for a while. I also believe that is why so much growth has happened in Dripping Springs proper, because people in Dripping Springs don't want to come into Austin. So I think you're going to see more live, work, play there, so people don't have to get on the road and come into Austin, which again, it's rising with the tide. That's why Dripping Springs is growing, and it's really phenomenal for them. I hope I answered your question.
Okay, we have another one.
Okay.
Sorry if I missed this, but did you discuss development trends to the north toward Temple and east of Austin towards Bastrop? In other words, how fast is development pushing outward from Austin as prices rise and become too much for the smaller investors and mom and pop tenants?
Oh my, okay. I don't know that I answered that question specifically, except for it's rising with the tide. So yes, going out to Bastrop, Manor, Elgin, absolutely. Up, oh gosh, what is it that you hit before Waco? Temple, Belton, Gerald, Texas. They are all booming, not at the same level. You're not going to see 96% occupancy rate in their retail like you do in Austin. So Austin's still the safer place, and why investors try to get in there first. I think there's incredible opportunity. This is DeLea's opinion. I feel that at some point, a lot of people are going to get tired of being in the urban area as we become more connected with computers, working from home, video conferencing, all of the things that are now at our fingertips, and we're getting more of it every day. I believe that we will see more people leave the urban area. Right now, the trend is they're all coming in. I think there will be a trend, not that they're all going to go out, but you'll see more of that. And yes, I mean, I talk to people that are moving to Smithville. A great example, I have a lease property in Lockhart, Texas. It's a restaurant, and we are signing a lease with a faux restaurant that's been in Austin, Texas on a trendy road, Burnett Road, for 7 years. They've got their new lease rate. They don't want to sign it, and they're moving to Lockhart. We're going to see more and more of that, but just beware, because I have seen listings in Taylor, Texas, which is 45 minutes northeast of Austin, and they will actually put Austin as their address. In my feeling is it's a way to lure in investors that don't know that it's not Austin. So I've seen things be overpriced in the outlying areas. But you know what? Get in there and do your due diligence. And in my opinion, it's a buy and wait game. If you wait long enough, Central Texas will continue to grow. Texas, the state, will continue to grow. We are business friendly. We have young people here to be employees. Gosh, we're just one of the best states to do business in, and I've shown the facts. That's not just my opinion on that one. I hope I answered that question.
Okay. We have a couple minutes if anyone else has any more questions. If not, you have DeLea's. Oh, here we go. What do you think of San Antonio for commercial opportunities?
Oh my goodness. I feel like it's a friend out there that's asking that question. Okay, so I will give you DeLea's opinion, but I have been in love with San Antonio for 10 years. I have a stepson who is now 23. He was raised in San Antonio, so for a decade, 14 years, I was in San Antonio at least every other week, if not more often. I am a big fan. San Antonio, the city, is spending money on utilities and development. The surrounding areas of downtown are, say, growing in popularity, but like Austin, they've been growing for decades. This is not something new. The most significant thing, if you have not been to San Antonio to see this development, is the Pearl Brewery development. The owner of Pace Picante Sauce sold the business, I want to say, I don't know, a decade or two ago. Anyways, he put his money into redeveloping the old Pearl Brewery. What has been done there is unbelievably cool. They extended the Riverwalk to connect with it. The Riverwalk is where you're going to see all the tourists and all the hotels and restaurants and everything else. Always been a booming area. They actually extended the Riverwalk another 23 miles down into the east of downtown. So everything around the Pearl Brewery, I would say, is booming, and it's kind of rising with the tide, but some people are overpricing. Also, it's hard to find anything to buy. Southtown is what they call south of downtown, very popular. King William. I tend to gravitate towards the older urban areas of towns, but there's a area of San Antonio called Dominion. I think that's what you call it. It's where all the Spurs live, mega $1 million homes. They've got huge commercial development out there, and I think that area is just off the hook doing well. Since it's my opinion, the only problem I see with San Antonio is they've got a lot of it. So if you need cool office space, they got a lot of it. So their occupancy rates aren't near what they are here in Austin. Doesn't mean that's a bad thing. That can still pencil out to be a good investment. And then the other, it's something significant that the city is aware of. There are some areas that have high crime, and it's a challenge. So you have to know what you're doing there. You can't just go, I'm going to go east of downtown, 20 blocks, because I have driven that area many times, and it may not be where you want to put your money. although it depends on what you're investing in. So I tend to, no, actually, this is how we always buy. We buy on the edge of scary. So wherever all the cool stuff stops, right at the edge where it hasn't gotten cleaned up yet, that's where I like to be. So I'm not saying bad areas, high crime, etc. Great opportunities for investment. Just know that going in. So compared to Austin, we just don't have that crime rate here that San Antonio has. But I see great things for San Antonio, and there's a lot of investors there.
Okay, we have time for, I think, this last question.
Okay.
I am a seasoned commercial agent in Galveston County, but I'm looking to the west side of Austin for future growth. What should I watch for in working the market with my Galveston County background?
Okay. I love this question, and thank you for tuning in. So, congratulations on being one of the higher ranking counties for opportunity zones. West Austin, west of Austin. The biggest challenge there, and it's why it has been slower to develop, is environmental issues. Most importantly, the Edwards Aquifer. Or other aquifer systems. So, and sorry, I use my hands for everything. I will compare and contrast. In East Austin, out to Lake Bastrop, most of our land is hopefully about 95% impervious cover, meaning that you can put your building on it, put your parking lot, detain some water, and you can build all of that up to 95% of, let's say, an acre, which is phenomenal. Whenever you go west of Mopac, really, but if we want to say out Lakeway, Dripping Springs, etc., they have significant restrictions. So I think it's about 25% impervious cover. And please understand, it depends on every piece of land. So this is just an overview to answer your question. So if you buy an acre, you're only going to get to use 10,000 square feet. A lot of development stalls because of that, because if you're going to pay the same price west as you do east, and you get to develop a lot more on the east, that's what most people are doing. So, but clearly it hasn't stopped Dripping Springs. Lakeway is growing. Now they're in talks about adding a second high school. That's their population growth. There's things going out Hamilton Pool Road. Unbelievable amounts of single family homes going on out there. So, yeah, I think anywhere in Central Texas is a great place to invest. I'm sure you would say same thing about Galveston. That's the biggest thing to watch out for, and why you'll see that not a lot of development goes on there as much as it does to, Central and East and North and South. It's just a lot harder.
All right. I'll pop back in. All right, thank you again, everyone. Just to give you a heads up, our next webinar will be on June 11th, and the focus will be commercial real estate in Canada. So this is a global webinar with insights on how to grow a global practice and what a Texas realtor can expect when working with Canadian clients. So that actually, we will be offering CE credit for that course. So if you are interested in hosting that for your members, just shoot me an email, or members can view this for free without CE credit. So thank you again, DeLea. And if you guys want to rewatch this webinar, I'll be up on the website as soon as I upload it. Right?
Perfect. Feel free to email me. Thank you all for your time. Go and have an amazing day.
All right. Thank you.